Hello, everyone, and welcome back here to the Pulse with the PeakBot team. I am your co-founder and co-host, Dillon, joined by my fellow co-founder and co-host, Ben. Ben, how you doing this morning?
Doing great. Great weekend. Yankees won. Moving on to the World Series. Pumped up about it.
Yeah, no, very excited for our New York Yankees. We feel like it's been a long time coming for them, right? Mets fans, sorry to the Mets, Jets fans out there. Tough day for you yesterday.
Yeah, really, really tough day.
To realize that the Jets are just as bad as they've always been is really, really depressing.
I think Aaron Rodgers is washed.
He's done.
He's done.
How could he not be done? I mean, it's just nothing looks. It's just this. It's just the same old Jets. I don't even know how Giants. What are they? They got Saquon Barkley ran all over you.
Oh yeah, of course.
Yeah,
he total of like 150 yards, touchdown on us. It was a mess. The Giants only scored a field goal all game.
And didn't it kind of feel like the Giants defense knew they were handing it to Saquon, couldn't do anything about it?
Yeah, I mean they played with him for years. They know what he's capable of.
Man, well, hey, look, Yankees in the World Series is very exciting. Ticket prices aren't exciting. Ticket prices are not.
They're going up too. They're going up.
When I looked at them yesterday during the day, like entry price was what, 1,600 or something like that. Might have gone up now that the opponent is locked. It would have been more if it was Subway Series. But LA, New York, this is gonna be fun. Classic. Anyway, we got another week of trading here ahead of us. We're very excited for today's show. Hang tight. We do have a special guest joining us today. And will very soon be a regular guest on the show.
Actually, a host.
A host. You're right. That was apologies to our guest.
No, host.
Well, today it's a special guest.
All right, let's get into PeakBot picks. Let's let people trickle in, and then we'll talk about our new agenda for Monday mornings.
Okay, so PeakBot picks, as we know, this is week 4. I am currently atop the leaderboard at 2-1. Ben's 1-2. Thomas is 0-3.
I thought we were going to let Thomas win a week.
Huh?
I thought we were going to let Thomas win a week.
Well, there's potential controversy here today, which we might be discussing. Let me pull up the picks. And Ben, why don't we look at the chart? Maybe you got your Tradier chart ready to go here?
I do.
All right. So I'm going to pull up my screen. We're going to take a look at the picks here. Okay. So let's start with me and let's go down. So Ben, switch to your screen. We're going to go through my 3 bulls from last week. These were credit spreads expiring last Friday. So we're checking in. Amazon earned $70 in premium, bullish put spread, trying to stay above 185.
Above 185. Let's see it. You got it.
Nicely done. Good start. Lowe's, $47 in premium, bullish put spread, trying to stay above 270 strike price. Loving it.
There you go.
It.
2 for 2 so far.
Last one, ticker XOM, put spread bullish for $35 in premium, trying to stay above 121.
Above 121. Ooh.
My reign may be over. I think I was 6 for my last 6. Now I'm 8 for my last 9 here. Really upset. What?
That's not bad.
Oh, it's great, but it's not enough. I don't know if it's going to be enough to get it done this week. So
okay, fair.
We'll have to see.
It's a tough competition. 3 picks.
Yeah, it is. So all right. Dillon went 2 for 3. Ben's up. Ben, bullish CMG, $10 in premium, earned $57 strike price. Nicely done. Nicely done.
Oh, 57.
What else do we got here? Ben also now went bearish, had hit 2 bear picks. Call spread on Sun Run, ticker RUN, $16 earned in premium, trying to stay below $17.
Below 17. Give it to me. There we go.
Very much so. Very much so. That's a bear run for that's tough.
Sun Run is
few weeks
running the wrong direction.
Running away from the sun, isn't it? Okay. And DJT. This has been pretty good to you. I think it let you down last week. You earned $43 in premium, $31 bearish.
So below 31.
Below 31.
Below 31, 3 for 3.
Now, when we looked at that last week, I thought that was in the wrong direction because didn't it switch to bullish this week?
It flipped. It flipped in the middle of September, but the volatility on it was insane. So the spreads were huge, which was why I kept picking it. Like if we look at this last month, it's definitely been bullish over the last month. But the spreads were insane, which is again why I kept playing it.
I love it. All right, so Ben, you went 3 for 3, dude.
Yeah, go me.
Let's see if Thomas can keep up here. So Thomas's picks: 2 bears, 1 bull. We have bearish Oxy, OXY, $12 in premium earned, trying to stay below 57.
Below 57.
Very much.
Well below.
Yeah, wow. Okay, very cool. Square, bullish, ticker SQ. $57 earned in premium, put spread, trying to stay above 68. Yes, he does. I said square, block. Okay. All right, 2 for 2. Now, I looked at this earlier. This last one's there's going to be some controversy here. We're going to have to go buy the book, maybe get some help, phone a friend. Boeing, bearish, $94 in premium earned, trying to stay below 155.
Below 155.
I don't know what to do with that.
Oh man. It's at 155.
ATM at the money for maybe newer traders, less experienced traders. You're not sure what happens here. If this were a live trade, and by the way, I think that's how we go and determine.
Well, the competition's a little bit different because after market movement plays into assignments a little bit, right? So, for the sake of this competition, we just go with the close price. And now I don't know what to do.
Yeah. So
I'll tell you what. It's me against Thomas, right?
Yeah, you guys both went 3 for 3.
I'm going to give Thomas the chance to get onto the leaderboard.
With a Rochambeau? Or you're going to give him the W?
No. I'm not going to give him the W. He's got to earn it.
Okay, rock, paper, scissors.
Yeah, we'll rock it out.
Friday. Okay. Tune in Friday to see Ben and Thomas fight for their lives to claim first place, and maybe Thomas can get in the win column here. Okay. Well, very interesting. Ben, do we want to take a second to explain, or maybe we can get into this later, if you were placing that trade, what would happen there?
Let's get into it later, just because there's we've got quite an agenda to get into, and we might just wind up talking about something along those lines anyways.
I think you're probably right.
If you were curious about assignments, we had a really good couple of episodes with Matt Cashman from the OCC on with us, where he talks about assignments and when different assignment scenarios and how you get skate by it, getting assigned, so on and so forth. A 155 close could be the recipe to skate by an assignment.
Yeah.
If you're lucky. It's happened to me twice, I think, in the last 6 years.
Okay.
So it's rare.
Rare, but it can happen. Just really quick, just a visual for the audience. I went 2 for 3. Ben went 3 for 3. TBD what we're doing right here, right at the money. What it's going to be is a rocks, paper, scissors Friday live show. Tune in to see who claims the victory. All right.
Cool. All right. So I wanted to go over these Monday shows now because, as we kind of hinted at the beginning of this, we're going to have another host join us, and we'll explain why and what led up to this and everything. But the new, call it, segments that we'll be going through are, one, we're going to go through a segment called Stocks in Real Life. So we're going to take a look at stocks that are in our everyday lives. We're going to analyze them. We're going to talk about our experiences with those particular stocks. Today, we're going to start with McDonald's. The second segment we're going to have is reviewing the economic calendar for any big events coming up this week. The third is, what model portfolio are we running for this week? And Dillon and I have been talking about this on the show the past couple of weeks, where we're going to run different bots and have different allocations to different bots depending on, is the market bullish? Is the market bearish? Is it neutral? What's my personal risk tolerance for the week, right? And that's going to play into our own investing decisions and our own decisions to set up particular bots. And then finally, we'll do some live account updating. And Dillon, I think you're on the docket today to update your account. So with that said, should we bring our new host on screen?
Yes, please.
All right. Drum roll, please.
We've got horrible drum roll.
Mark Phillips from Harvested Financial joining us. Not only as a guest today, but he will be a host with us on Mondays. And you might be thinking, okay, well, I think I've seen this guy before on the Tradier Hub. He's been on some other shows. Why is he hanging out with the PeakBot guys now?
Good morning,
I'll what's that?
Good morning. Thank you for having me.
Good morning. I was giving you an intro. It just happened to be a little bit longer of an intro than I thought it would be. So I'll give the brief details, and then Mark, maybe you can talk about why you wanted to do what we're doing with PeakBot. So in short, Harvested Financial and PeakBot have partnered, so that way Mark can offer PeakBot software, PeakBot bots through his advisory services. So we share a common goal of wanting to help the retail trader. But Mark, why don't you talk a little bit about yourself and why you're excited about this partnership?
Yeah, absolutely. So like Ben said, my name is Mark Phillips. I'm the principal over at Harvested Financial. And we're a registered investment advisor, which means I have a bunch of disclaimers I have to say about what my conversation is and is not. It is educational. It is informational. It is distinctly not financial advice. If you want financial advice, that's why I'm here. But we have to sign a contract and do a bunch of fancy stuff because I'm a regulated investment advisor. And as a regulated investment advisor, one of the key things I can bring to the table is the ability to make trading decisions for people. That's really what all the regulation is about. I can say, this is the appropriate stock. I can say, this is the right time to be in stocks. This is the right time to be in condors. This is the right product for the wheel bot. And so I think what makes this a really interesting and exciting partnership for me is that I have a team that's developed amazing technology, that's got the tools that will access the markets, that will trade on your behalf. But then I can focus my time as the advisor on managing that last spin on the ball, on managing the specific selections, on managing some of those quirks with options, right? Whether you land in between a spread and should I close early, and some of the nuances here, all the way from the beginning and the selection and the allocations to the end of day management, whether you get expired or how expiration happens, whether you get assigned, all those fun things that make options exciting also require quite a bit of management on their behalf. So the combination of man and machine is really what this partnership is about, and I couldn't be more excited to dig into it with these fellas.
Oh, Dillon, rookie move.
Oh man, today is such a Monday morning, it seems. Mark, let's not even focus on me. This is about you and us collectively. Great to have you on the show. Thank you for joining us. We're very excited about this partnership. For us here at PeakBot, since the day one, we were all about providing access to the retail trader and helping the retail trader have a more successful, consistent investing and trading experience. And now with this partnership, we're really filling a gap here, right? Introduce automation into the portfolio management process, and we're able to do a lot more with a lot less, if you will, right? So accounts, as low as $10,000, we're able, through Mark and the partnership with Harvested Financial, able to help you out and provide you a true hands-free trading experience. So very excited about this. Gentlemen, I think we have a lot to cover, so maybe I'll shut up and Ben, I'll let you drive the bus for a second and determine what we'd like to do.
All right, let's get started with stocks in real life, and we'll just talk about that for a minute. And then, what do you think? We could maybe dig a little bit deeper into how somebody can get started with these new services while we still got some people coming in this morning.
Yeah, absolutely.
Cool.
I think stocks in real life is a great conversation for us to have, us three in particular. So for context, stocks in real life, for any of you who've really been following PeakBot for a little while now, talking years, we used to do this. We used to make a lot of content, video content around stocks in real life, and we would visit these places, or whether it's Lowe's or Walmart or McDonald, not visiting, just living our normal lives and ending up at these places and our experiences with them, if we've traded them, etc. So the first one felt appropriate to just go McDonald's. We have a bunch of McDonald's lovers here on the call, I think, and we've talked about our orders, which maybe we should discuss.
Oh yeah, I'm a big McDonald's lover. Actually, fun fact, Dillon, I don't know if you know this. Mark, you definitely don't know this. But so my wife and I, we've been together, not married, but we've been together since we were 16 years old. Our first date was at McDonald's.
Wow. Yeah. I don't know if I knew that, but I did always know that you were a true romantic. So that does add up. Very cool. Look, hey, you knew what you were going to get, right? Like you knew what you were like. There was no question as to if you were going to enjoy the meal or not.
Oh yeah, absolutely. McDonald's is probably the most consistent restaurant I've ever experienced in my life. I make it a point to go to McDonald's, whatever country I travel to, just so I can make sure that the quality is, the same, if not better.
I was going to say, oftentimes it's better. Mark, you ever have
and new dishes too? There are things that I see internationally that I'm like, why can't they bring that over here?
I had shrimp in Liechtenstein, and that was an experience.
Mark, you ever have an international McDonald's experience?
Quite a bit. Well, I lived in France for a number of years, so that was a go-to and also get a dose of Americana, right? Like sometimes you've had too much schnitzel, and you need a good old hamburger. So I think it's fantastic, refreshment and reminder of what American culture is if you're missing that.
Yeah, that's incredible. The last time, so I was in France a couple years ago with my wife, and I had a McBaguette, which was delicious and everything I never knew I needed. Right. And we talk about consistency. Now, looking at the chart actually for the last year, we do see consistency, although it's in multiple directions. Ben, can we look at all-time McDonald's chart really quick?
Oh man. Yeah.
Okay. That's consistent. That's pretty damn consistent right there. When did we really start to see the action for McDonald's?
We really started to take off. Looks like, honestly, that wasn't really impacted by the recession in 2008, like minor pullback. I think from there, that's where McDonald's catapulted. I think if I had to guess, investors were like, that's a resilient company. I'm putting my money there.
Yeah. So that's a very consistent stock. Trading it, I'll tell you my experience trading the stock. And I'm wondering, Ben, if McDonald's is got to be on a couple of our watch lists right now.
It's on the wheel. It's on trend spread. It's an expensive stock for the wheel.
It is.
So I think it actually finds its way off of the watch list every now and then. But if we look at the year chart, I mean, we've been in a pretty this is good wheel territory right here, all the way from middle of July, which again, so this is a bit interesting that I find, because if we look at the SPY in the middle of July, that's when we started to see things dip a little bit. So middle of July, coming back down, but flipping back to McDonald's, and we kind of just saw this briefly in the 2008 pullback. In July here, McDonald's actually started to bump up. But it's interesting if we roll down to some of the financial data here, the 1-year beta is positive. So there should be a positive correlation between McDonald's price and the market price, but we're not really seeing that hold true so often. Now it is a weak correlation, it's closer to the one the more correlated, but we're not really seeing that too much, at least recently. Mark, what are your thoughts on, again, not financial advice. If you need financial advice, you're going to hire Mark. But what are your thoughts on this chart here?
I thought the exact same thing you did, that you look at that and you just say, that's wheel. Or that's very trend-like too, right? There's a distinct trend to that. But like, especially, and you make the point about the high dollar price. That's one of the things I really like about your implementation of the wheel, is that you do have those spreads going on. And of course, there's risk of assignment if it does land in between those. But having that long put to protect you against a real gap down means you're not holding a $31,000 bag. You're holding something that's much more contained and defined by, that spread width there.
Yep. Absolutely. We did have a question come in as we were talking about McDonald's here. Let's see. Let's get that on the screen. Good morning. And it says, site about first week with PeakBot. Thank you for joining us at PeakBot. The question is, does the bot stick to the exact strikes on the iron condor that are found on the list? Okay, cool. So we'll probably get in some more details of that in a little bit. I think in terms
I did answer it in the chat. I did
answer in the chat, but we'll get into that in a few minutes. So stick around, but we'll wrap up our analysis for McDonald's and stocks in real life here. So I think the way that I would want to conclude here for myself personally, if I were trading McDonald's, and I'm not trading McDonald's myself, but I'm looking at this trend since July moving up. In my personal opinion, again, not financial advice, I think it's a great candidate for the wheel, right? Even if you do catch a bad week and you do get assigned shares, when the wheel flips around and starts selling calls for you, that call strike price, based on what I'm seeing here, is probably going to be at the price you were assigned, or potentially even greater than the price you were assigned, setting you up for a potential realized gain on the buy and selling of the shares. So I see, for me, I would play the wheel on this. Dillon, what would you do with this stock?
Yeah, truthfully, I was going to pull up my screen here. Can you see it? I have it.
Switch it.
What's that?
You're good. Zoom in.
Okay. So I have this pulled up on the trend spread watch list on our alerts website here. So McDonald's, for me, great wheel play. If I had the cash in my account to have McDonald's on the wheel, I would have McDonald's on the wheel right alongside Walmart, Bank of America, etc. My account doesn't have the cash for that, at least right now. So where I would play this, and where I'm thinking about playing it after looking at that technical analysis, Ben, when you did that, was that for the week with only one sell signal, or was that for the month?
I wasn't even looking at the technical analysis. That was 15 minutes.
Okay, give me the week really quick. What's it say?
If we flip this to the week here, 0 sell signals, actually.
Okay.
And then
so for me,
one sell, but more neutral.
So for me, bullish trend, low risk. The EV doesn't set up too nicely, but I can get past that. 76 POP, a nice ROI, a good enough buffer on a stock this, expensive. I like only having to allocate $500 to trade McDonald's here. $41 in premium. I can see my strikes at 312. And this is data from Friday, so this will get updated as soon as the market opens here in about 35 minutes. But, as of Friday, a sold strike at 312.5. I mean, I would have to just take one more look at the chart, but I like that on trend spread actually this week. Very bullish on that.
Well, to comment on the premium there a little bit, like I think when you're thinking about a wheel name, like you might be drawn to the premium, right? Like a lot of these strategies tend to be premium collection strategies. We want to see big numbers, and we want to see big numbers that are driven by high implied volatility. Like those big numbers are driven because stocks are going to move around a lot, so there's more of a premium paid for that. when you're thinking about the wheel, I wouldn't get too focused on that, right? Like, I think what we've all been talking about is more about the trend here, more about the momentum, more about the stock movement. Like, really, the wheel's going to win on a delta play. Like, your premium's a nice buffer. Like, that is what you're going to collect on this. Like, that is going to be your return. That's worth being aware of. But if you get too drawn into a wheel strategy where you're selecting only based on that return number, you're going to end up with a much choppier experience, right? Like, you need to think about the direction of the stock here as much as you're thinking about, if not more so, than that premium than you're collecting on this. So don't get drawn into the high vol names with a wheel just because you see a big premium number or ROI number there. You'd rather collect that smaller number more surely than, have a bigger number that swings all around on you.
Totally. I couldn't agree more. I like to be boring with the wheel. It's like, do what I know, do stocks that I know aren't going anywhere. I'm comfortable owning these stocks. I think McDonald's is going to not only survive any type of, disaster we might walk into, but maybe even thrive. I'll tell you what, market's going down, my bank account's going down. I hate to say it, I'm going right to McDonald's. My health is going down with it, but I can do a lot on a budget at McDonald's. I'll tell you that. But yeah.
All right, let's keep motoring through here. And I wanted to just go back to the conversation and go back to, why we've got Mark on the show. So again, for anybody that has just joined, PeakBot and Harvested Financial, Mark being the principal of Harvested Financial, we have joined forces here to offer financial advisory services and the power of PeakBot's trading bots all in one package. So if you do want that truly hands-off experience, you can get it. I'll just flip up this on screen here. So this is where you could get signed up. Now we are only bringing on about 10 clients per week. Now the rate at which we bring on clients will increase in the future. But for now, we're only bringing on 10 clients per week. So if you want to get involved here, shoot us a text. Maybe we can get our phone number up on screen here. 973-888-1166 and say in for RIA. and that'll get you on the list to where Mark from Harvested Financial can manage your account using PeakBot bots. Mark, I know we talked about it a couple minutes ago. We got a few people that have trickled in since then. Why don't you give an overview of what that experience is going to look like if somebody does want to work with Harvested Financial? How is PeakBot involved and how are you managing their money?
Yeah, that's a great question. So at the end of the day, when you decide to work with me, or should you decide to work with me, I have to perform all my standard financial advisory duties. So I hate to break it to you, but there's going to be a couple questions. I'm going to ask you what your tax bracket is. I'm going to ask you what your risk tolerance is, all those sort of standard questions. We have to get it out of the way at the beginning. And that's what we built this website here for. The onboarding, try to make it as seamless as possible. That should only take between 10 and 15 minutes to kind of get your application initially set up. And with those kinds of details, that's when I can start the conversation either with you directly if you're interested, or we can slot you into one of our model portfolios. And so what we can do with these customized portfolios is based on your objectives, your risk tolerance, your specific stock interests, even, the type of risk that you're willing to bear on a weekly or monthly basis. We create customized portfolios, or I should say objectives for you. And then on a weekly basis, those get adjusted, because if you're a fan of this show, if you've been following along PeakBot, or even if you haven't, the markets move, right? McDonald's is a good play, this year, but it might not be next year or next month even. And so while I love doing iron condors and SPY every week, like my trend names might change or my wheel names might change. And so you can't just set it and forget it here. That's kind of the problem with option strategies. It's also the benefit of them, and I think why they generate more returns, but it's not like the dollar cost averaging you can do. If you want that, buy SPY every week. You don't need me. Good luck. Great strategy. But if you want something that's going to be more kind of higher risk, higher returns, ideally, you need to tweak it. You need to worry about what's going to be trending this week. You need to think about when economic events are. Do I turn on and off my iron condor when Jerome Powell's speaking? So all of that kind of active management, active selection, active turnover will happen in the background. You have to fill out one questionnaire in the beginning. We can have conversations as we go along, but for the most part, I'm managing that using a number of different tools and that I've built on my side alongside, the bots that are executing. And just a little bit of background about myself and why this is such like an interesting combination for me is before I was an RIA, I was a market maker. And so I spent 15 years working for one of the large Chicago shops. And our style was very much man and machine, right? We had tools that were out there generating quotes, updating based on where stock movements were happening, updating based on where markets were. You need a machine to do that. You need a machine to handle all the ticks and the settings as stock prices change. A human can't do that. You'd be trading like it was 1992. But at the end of the day, you still need a human to be updating those curves, to be saying, hey, volatility is a little high, volatility is a little low. This is what order flow happened or is doing and is telling me and how I need to react. So to me, this is very much the retail RIA extension of what I spent, my entire career before becoming an RIA doing. That you have the bots and you have the scripts and the algorithms managing all the implementation and, monitoring on a day-to-day basis, week-over-week basis. You kind of have the human nudging it this way or nudging it that way based on, other indicators. I have a full suite of options-based indicators that I use on my side. So there's setup in the beginning, but after that, it runs on autopilot with someone moving moving those settings, picking those stocks, all in the background for you. So we use Tradier brokerage to accomplish all this. And Tradier is a great partner for both of us, obviously. But their API is kind of second to none out there. I've worked with a number of different brokers and a number of different, implementations for option strategies. And the way we can trade with Tradier is kind of unparalleled. So, they offer us great execution in terms of fills, a very programmable, interactive kind of interface. So, I think this combination is going to be really, really, really powerful and very seamless for the end client at the end of the day.
Yeah, I couldn't agree with you more there, Mark. And talking about fills too, this is something that I noticed because I'm testing the same bots on Tradier and on our other brokers that we're integrated with. I always get filled first on Tradier. It's kind of crazy. I don't know what goes on behind the scenes to make that happen, or if it's just happenstance that does. But I always find myself getting filled on the same strategies first on Tradier, which is it's nice. And it's not just that the bot is placing the order first, it's that there's an order place and I actually like for a take profit, for example, and I get filled first. So Tradier, extremely happy with all of the experiences that we've had with them. And if you currently have a Tradier account, you'll know what we're talking about. Dillon and I talk about the Tradier Pro and Tradier Pro Plus and how much sense that makes. Actually, Mark, from the fees perspective, from the advisory side, does Tradier Pro and Pro Plus still apply? I'm not sure that we know.
Exactly. So we'll be setting up that same $10 a month subscription and you get unlimited trades with that,
Awesome.
Which quickly adds up. I think one of the benefits of these bots is that they are trading actively. They're capturing that profit. They're entering, on a daily basis or weekly basis. Like at the end of the day, those commissions do add up. But if you can cap it at $10, that's fantastic. I mean, you pay that back within a couple days.
Absolutely.
Yeah. One trade if you're doing enough size. I mean,
it pays for itself almost immediately depending upon your account size. Like if you're trading with $20,000 in your account or anything north of that, I mean, Ben, we were paying, when you're paying 65 cents per contract with other brokers, I mean, $100 a week, $150 a week, $200. I mean, it's crazy because we're trading 1 DTE condors. By the way, like Tradier Pro Plus, more 35 a month. But if you're trading a ton of SPX, which has its own fees, elevated fees, that gets dinked down to like 10 cents. So it's like there's so much savings to be had. It's a great, a really great setup. And again, we had so many of our subscribers coming to us and saying, look, I love the bots, love how, I love everything about this, but I suck at picking stocks. Please, can you manage it for us? And our answer was always no. We're not licensed to do so, but Mark and Harvested Financial are, and we're very excited about this partnership. Again, text us the number below on screen in for RIA if interested in getting on board. Again, there's a growing wait list, bringing on about 10 clients at a time here to start. So
yep. We will send you the link to this page where you can get started, and you can also play around and see what the fees would be depending on how much capital you want to let Mark manage here. The account minimum is $10,000, but I'll tell you what, you're not going to find that with any other financial advisor. Very, very low entry point in that regard. And we take your money seriously. So text us 973-888-1166 in for RIA, and we will get you this link, and you can get yourself added to the wait list. So let's keep the train moving here. I don't want to keep people all the way until the bell, and we've got 2 more segments at least that I'd like to cover. One is a quick economic calendar review for big events, and then second is just talk about what type of model portfolio are we personally going to be looking at for the coming week. So cool. I'm going to pull up my screen once again, looking at the the Trading View economic calendar for the week. I've got just US events filtered here. I have all events. I can filter for just high priority events, and we don't really get anything until Friday morning. But we know that there are other events that have impacted our strategies in the past that are not marked as high importance on TradingView. So I'm just going to flip through the days quickly, and then Mark and Dillon, you guys stop me if there's anything on here that pops up where you might think, oh, I might want to avoid trading during this event. Maybe I turn my Iron Condor off, or maybe I want to avoid a bearish play this week because everything I'm hearing about, for example, last unemployment rate release, I'm hearing good things about unemployment rates, right? Maybe we want to avoid a certain side. So flipping through what we've got today, we've got a couple of Fed speeches, not Powell. We know that Powell's got the power to move the market in either direction. And then we've got some bill auctions. Nothing, in my opinion, worth changing or considering in our strategy. We've got another Fed speech tomorrow. We've got another bill auction. We've just got a bunch of data coming out. Moving into Wednesday, a bunch of homes data, a bunch of oil data this week, gas, some more Fed speeches, bond auction, 20-year bond auction, which the bond auctions we have seen move, and impact our strategies a little bit, but I don't think we've got enough data to firmly say we shouldn't be trading during a bond auction here. Moving into Thursday, again, just a lot of...
Thursday has jobless in the morning. That's like probably the one that I might consider.
Yeah.
But I don't know that and this is the thing about economic events, right? Like you can't say always be out on CPI. You have to consider the context of what that CPI announcement is going to be. So jobless, sometimes I'm willing to kind of put it on pause, but I wouldn't say this week. I don't think it's a big number.
You know what's probably worth it, Mark? We should take a further look, and we have been doing this for certain events, but we should take a look at our strategy's performance throughout these different types of events and see how it affects the win rate. And I will say we are testing another 1 DTE Iron Condor with one of our white label partners, and it's funny. The day of FOMC doesn't impact the win rate, but the 2 days following FOMC, the win rate drops from 79% down to 50% in those following 2 days. So for us as data guys, we're like, let's just not trade those days. It's not worth the 50-50. So could be a fun exercise for us to go through and pick out some economic events to take a look at the bot's performance through them. And then we've got durable goods orders month over month on Friday. That's the only high importance event as indicated by TradingView this coming week. So with all of that in mind, and from looking at the SPY, where we're at now, what type of model portfolio, Dillon, I'll start with you. What are you looking at for this week? How do you want to divide up your portfolio?
Well, yeah. So do me a favor. Let's look at the last month and the 5-day chart here for me. All right. So obviously I've been more bullish in my picks. The last month has been very bullish. Show me the 5-day. Okay. So a little movement here. Go down to the technical analysis. I'm pretty bullish. Now, obviously my risk tolerance and the model portfolio there is going to skew based on how I'm personally feeling. But I mean, look, not that this technical analysis is, by any means our Bible, but hit me with the month. Yeah. I mean, look, for this week, I'm going to be pretty bullish. I'm going with a moderate portfolio risk, moderate risk tolerance. And I'm saying we're in a bullish market. Would you guys agree? I mean, hard to disagree. I don't know. What do you guys think? I'm going to pull up my numbers for breakdown for my model portfolio. But while I'm pulling that up, I'd love your guys' opinion.
I think if it depends on the time horizon. And I think right here we're talking about the next week. So
yeah,
I think over the next week, over the next 2 weeks for sure. I think once we start including the election, that's like kind of on the radar is potentially more of a risk off scenario. But if we're just looking at the next week, I think we are drift bullish.
Yeah.
Mm-hmm.
Yeah.
I'm kind of in the same boat as you, Dillon. When you were saying, I think we all are in agreement, market direction, bullish. My personal risk tolerance for this week is, I think, moderate to high, just because, like Mark mentioned, we've got the election coming up, right? And we don't know how the election is going to impact the markets, but we can kind of get a sense based on where we move in the next couple of days, how we might trend all the way up until the election, right? So that's just my personal opinion. Again, let's get that non-financial advice banner flowing here.
Yeah. All right. We'll get that up there.
But that's how I'm feeling. And I will say, when the election does come, iron condors are off for me.
Yeah. Not financial advice.
Yeah. I'm a little riskier on my iron condors. I like keeping them in all but the most extremes. But that said, the election might be an extreme.
I was going to say that might define it.
At least the 5th into the 6th, right?
Yeah.
That's
that day. Chaos.
Well,
I don't know if that's going to be
day.
the day that the market moves, though. That's what's so hard about, like, are we going to wake up on the morning of Wednesday and the market's going to zag one way or the other?
Yeah, who knows?
Is it going to be after 2 weeks of protracted legal battles that it finally zags?
Yeah, it's true.
It's true.
You can't collect that premium without taking some risk.
It's true. And that's exactly it. It completely depends upon your risk. If you're low risk, like, you're not probably going to touch a lot. You're going to be pretty cash heavy in your portfolio during this whole election. But, it depends what you could do. We know money will be made and money will be lost. But my point is, Ben mentioned he's more toward the high side. And Ben, I think that's due to your confidence in the market direction right now, right? Like, I think you're more so determining your risk tolerance based on your confidence in that direction week to week, right?
Yeah. So, and if I'm looking at, what my risk tolerance means and market direction means for my model portfolio, I'm looking at about 50-ish% of my portfolio being in the wheel. So even if I do get assigned, right, I'm confident that prices are going to trend upwards. I'll have to decide if I do get assigned shares, if I want to hold them through the election or not. And then as it goes to iron condor, I'm like 20 to 25% in iron condor. Trend spread is around 10-ish%. And then I'll hold like 10-ish% in cash too.
Yeah.
And the reason why I'm lower on trend spread during a bullish market is I'd rather collect the premium and potentially be assigned shares because I can make back any unrealized loss in the case that price keeps going up. Whereas with trend spread, you take the loss, you cut and run. Trend spread, I'm personally more likely to use trend spread in a bearish market.
Yeah, no, absolutely. And I want to make sure we address a couple of the questions in the chat. But yeah, Ben nailed it. Look, the wheel, at least for Ben and I, for our model portfolios, the wheel is the cornerstone, right? Regardless of its being a neutral market, bullish, bearish, risk tolerance anywhere from low to very high, the wheel always still remains the majority, percentages of where your cash is going to be allocated for us, for us, not financial advice, right? So I'm taking a similar approach. I'm probably going to put 60% of my cash in the wheel this week, which I know pretty much I have filled up normally between Walmart, Bank of America. I'm going to put 20% Iron Condor, going to play with some cash, maybe put like 20, $2,000 into trend spread and keep some cash around for this week. So that's the way we see it.
The
Mark,
wheel makes a lot of sense because in some ways you're picking stocks, and that's very intuitive for people. For me, that's the way. It's a lot easier to pick stocks than implied volatility levels. And so, like, if you're thinking about like what names make sense, like that kind of analysis, whether it's fundamental, technical, or whatnot, like, go with your good old stalwarts of Bank of America and Walmart. I mean, those blue chips aren't going to give you a huge premium, but a little bit adds up, and they're the type of names that keep their heads afloat. So.
Yeah.
Great picks.
Absolutely.
Not financial advice.
Not financial advice. What do we got on screen here? Question from Doug. So if Iron Condors are off, is there another trade you'd switch to or just sit out? Of already needing to be careful with the answering of this. I guess
I would hire Mark.
Honestly, like I tend to think of them as I would probably just sit out because the days that I'm out are so few, right? That if I have an Iron Condor as, my standard is very similar to these folks, right? 20, 25%. Like I think that's kind of the right amount for a portfolio. Obviously depends on risk tolerance and whatnot, but I'm in 90, 95% of days that there's maybe 1 or 2 days a month that I'm out and I'm just out for that day or maybe that other day. So that just sits in cash. I'm not going to allocate it to another strategy because I'm going to want that cash tomorrow. And the Iron Condor strategy being a one-day strategy, like I want that ready and available. So with this implementation, I just sit out for the day if I think Jerome's speaking or I think there's, the election uncertainty or whatever it might be, and then be ready to jump back in the next day because Iron Condors are capturing like a volatility risk premium. And like, that's the type of thing that needs to be a lot of coin flips. You got a little bit of edge, you got a couple pennies, maybe a nickel or a dime of edge in each of these trades. And you just need to do it over and over again. So pause when it's prudent, but for the most part, keep that cash active and allocated there.
Yeah. And I think within the next month or so, we'll probably be releasing some data that we've sifted through and researched and looked at our own bots results during those particular events. And that can help you, we are working on adding an economic calendar to PeakBot so you can see all the events that could potentially impact the strategy, or at least the historic win rate shows that it impacts the strategy on those particular days. But that'll help you make the decision if you want to pause your bot or not.
Absolutely.
Actually, this is a great follow-up, if you don't mind if I take this.
Yeah, go for it.
Like the Gamma Scalp is, I think, one of the best features of the Iron Condor bot is the automatic closing of those. And so it's not exactly a Gamma Scalp that you're buying low and selling high, but you're sort of avoiding it in the opposite direction, right? The market zags up early in the morning, you close your puts. And if we fall down in the afternoon, your puts that might have been in the money are now closed and you can close your calls. So I think the implementation specifically of the Iron Condor bot is something that you're short, so you don't want to negatively scalp your gamma, but it conveniently gets you out when you can. So I think that's actually a good reason to keep it on because, to the extent that you do see that intraday chop, it's actually advantageous and lets you get out of, a short gamma pinch.
Yeah, that's a good point. Unlike trend spread, which suffers during choppy times, the Iron Condor thrives because of what you just said, Mark. Each leg, each side of the Iron Condor gets out separately. So if we do see a big swing during the day, that's great for the strategy.
Yeah.
Cool.
Also, Silena, thank you for interacting and engaging with us today. Her last comment is going to go to my retirement account without me having to do so much work. I'm so excited to have found you guys. We're excited as well. And that's the whole goal here. Sounds like you are the perfect fit, Silena. So anything you need, as you know, we're always available.
Great.
Excellent.
Love that. Love seeing that on a Monday morning.
Yeah,
makes
absolutely.
The work going forward this week seem that much more enjoyable. So this was great. I think we should wrap here. We got 10 minutes to the bell. going forward, like we mentioned, Mark is going to be a host of this show with us. We've got a partnership going here. PeakBot, Harvested Financial. This is awesome, guys. This is really cool. So every week we'll be going through similar segments. We'll do stocks in real life. We'll take a look at economic events. We'll take a look at our model portfolios. And then, we'll come up with new segments as we see fit or as you guys want to see them. And I think we're going to have a segment where Mark just drops some knowledge on us every week.
Yeah.
So we'll talk about what that looks like. But
negative gamma scalping wasn't good enough for you?
That was
no, that's what made me think of the idea.
Excellent. Well, gentlemen, great show, great audience, almost 600 live viewers here today. Appreciate everybody joining in on their Monday morning. Market opens here in less than 9 minutes. Hoping everyone has a great week of trading and investing here. As always, if you have questions, contact us. The phone number's on the screen below. For interest in utilizing PeakBot's automated strategies for yourself, you can schedule a demo also on screen below. And I believe, let's just get this up there one last time. If you are interested in our professionally managed accounts through our partnership with Mark at Harvested Financial, I'm looking for the banner. Text us in for RIA to the number on screen. So, Mark, thank you so much for joining us here today, and you'll continue.
It's great to be here. It's great to be working with you guys. I'm very excited.
You're the man. We're pumped, and so is our community. Everybody's very excited to be getting started. We had an onboarding call last week, 2 weeks ago, and things are looking up. So, as always, thank you so much for tuning in. Ben and I will be back with Thomas live on Friday at 11:55 a.m. for some hands-free trading, a rocks, paper, scissors to determine the winner of the PeakBot Picks competition for last week, and some more very fun stuff. So, thank you so much. And as always, we'll see you at the peak. Take care, everybody.
Happy trading, everyone.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.